Hello and welcome to this video edition from Nour Hammouri in coordination with Orbex. In today's video, we will take a look again at the latest developments in the global markets and we'll preview also the most important events for the upcoming week. Moreover, we will update the technical charts that we are following since the beginning of this video series. Beginning with the major event last week, OPEC has finally come up with a deal to cut the production and also have set a new ceiling or production ceilings, which basically led the crude prices to rise by more than 10% in a matter of a few days, or especially in 2 days. However, what matters now is whether this deal will be implemented in the coming months as it's agreed. But there's no guarantee that OPEC members will produce less than 32.5 million barrels, as this is what we've seen for the past or since the beginning of the year. Therefore, traders need to watch December figures very carefully, or which will basically be released at the beginning of next year. A production higher than the ceilings mean that there is no will from some or even all of the producers to stick to this deal, and in return, crude prices might be under pressure, or crude prices might be at risk to fall again, or even to decline or to lose the 10% that basically added in this in the past few days. As for the second event, which was basically from the U.S. jobs report came in with mixed signals. There are many views. Some would say that the unemployment rate declines to the lowest level since 2007, which basically means that the economy is recovering. And some would say that also the unemployment rate decline is driven by the decline in the participation rate, which I personally also agree with. But moreover, the average wages posted at the first and the biggest decline since 2014, which eases the chances for the Fed to raise rates in December. And this is why, or one of the reasons why the US dollar declined on Friday. Yet there is still a possibility of more than 90%, according to the Fed Fund futures, of a rate hike in December by the Federal Reserve. But the Fed will most likely be very cautious in sending new signals and new or even messages to the market regarding the next rate hike, which I believe at least that it will not come very soon. So these are the major developments that I would like to comment on for the past few weeks. But right now, let's have a look at the upcoming economic releases for the week ahead. Beginning with Monday, another day with a little bit of important economic releases, especially after the Italian constitutional amendment vote. But on Monday we have many economic releases, especially from Europe and the UK, and we will be waiting for the services PMIs in Europe and in the UK. We will be waiting also for the final services PMI and the services PMI. Beginning with Spain and Italy, in Italy, we'll be waiting for the initial services PMI data, while in France, Germany, and the Eurozone, we're waiting for the final PMI data, which unlikely to have a major impact on the market. But the one in the UK, which is expected to slow down a little bit toward 54.2, down from 54.5, but traders should be aware that the recent economic releases from the UK showed a very strong recovery, especially after the talks about soft Brexit instead of hard Brexit for the time being. But those are the most important for Monday. Also during the European session, also during the US session, we'll be waiting for the ISM non-manufacturing PMI, which is expected also to show further improvement toward 55.3, up from 54.8, which would be the highest in almost 2 months. And finally, during tomorrow or on Monday, we'll be waiting for some of the Federal Reserve members, which basically due to speak, including Dudley, who is due to speak to speak the economy and the monetary policy in New York, and also we have Mr. Bullard is expected or due to speak about the U.S. economic outlook at Arizona State University annual economic forecast. So those are for Monday. In addition to that, going toward Tuesday. Tuesday we have many key economic releases, but beginning or we'll start with the RBA decision during the Asian session. And there's a lot of estimates that the Reserve Bank of Australia might come up with a decision to cut the interest rate again by a 25 basis point toward 1.25, especially after the housing market and indicators which showed a notable decline, especially the building permits, which declined by more than 25% in the past only 3 months. So there's a possibility for a rate cut by the Reserve Bank of Australia. In addition to that, we'll be waiting during the Asian session. We'll be waiting for the German factory orders In addition to that, also going into the U.S. session, we'll be waiting for Canada retail sales and the U.S. factory orders. And in Canada, the trade balance deficit is expected to narrow back toward minus 2.1 billion, down from minus 4.1, and the U.S. factory orders is also expected to show some sort of a recovery toward 2.5% compared to a decline of 0.3%. Going forward also toward Wednesday. Wednesday we have beginning during the Asian session, we have the Australia's GDP figures, which is expected to grow by 0.2% compared to 0.5%. This would be the first initial reading for the Q3. However, this would be, or if the figures comes in as expected, this would be the weakest growth figure since September or since Q3 of 2015. Going forward, also we have during the European session, we have the German industrial production, we have also the UK manufacturing production, and both are expected to have notable impact on the market. But most importantly, during the US session, we'll be waiting for a Bank of Canada rate decision, which basically we believe that's going to stay unchanged at 0.5%. That's in terms of the rates. We'll be waiting also for the US crude oil inventories, which so far is expected to show some sort of a deficit again during this week, which will be the second week in a row. In addition to that, we will have the jobs opening in the US also due on that day, especially on Wednesday, which is expected also to rise further toward 5.53 million. Going into Thursday, which would be the most important day of the week, but beginning during the Asian session, we'll be waiting for Japan's final GDP, which is expected to be revised up towards 0.6% instead of 0.5%, which would be still the highest growth rate since Q3 of 2015. In addition to that, we'll be waiting for the Chinese trade balance data, which will be like very important to follow, especially after the decline in the exports for the past few months. But the estimates for this month is expected to narrow back to $307 billion, down from $325 billion. The most important event for that day will be during the European session and ahead of the US session, which is the ECB decision. There's many talks about there will be an extension for the current QE for another 6 months, but this would be highly probable because again the latest economic figures from Europe showed some sort of deterioration, despite the fact that inflation is still on the upside. But what would make the ECB to go ahead with further QE is basically the latest sharp decline in bonds globally, not only in Europe. But traders again should look at or follow the press conference by Mario Draghi, and we will give you also a special report on that day. In addition to that, we'll be waiting also for the US jobless claims. As for Friday, we'll be waiting for the Chinese data, Chinese CPI and Chinese PPI. The CPI is expected to expand again toward 2.2, and also the PPI might also rise toward the same level, 2.2, which would be also the highest level since almost May of 2016. Going forward, we'll be waiting for the German trade balance data during the European session, which is expected also to narrow back toward 20.8 billion euros. Finally, we will have the U.S. goods trade balance, which is also expected to show a deficit of 11.9 billion, which is slightly better than the previous number, which is minus 12.7 billion. And finally, University of Michigan Consumer Confidence Index will be released also on the same day, and the expectation shows our notes that or points to a higher reading toward 94.3 compared to 93.8 for the month of November. Those are the most important economic news for the week ahead. And again, we will be sending you some special reports about some of each events, especially the central bank decisions, and also we will have a webinar on Monday ahead of the Reserve Bank of Australia, and you can contact Orbex, or you can go to orbex.com to get to register to that webinar. So going into some of the technical charts that we're following since the beginning of this video series. And as we mentioned last week, we had another day of a break above a notable resistance area for the euro, which was around 106.57, and closed the week well above that level
which was so far for the time being, it looks very positive for the time being, and also the RSI has started to gain more momentum, and also the stochastic is still positive, but slightly almost breaching to uh, oversold, overbought area. But at the same time, if we look at some of the technical areas that we have to look for the next few days, the 23.6 for the Fibonacci from the latest high, which you can get it from whether you can put it from this high or even from the other one. Both will give you almost the same levels. Here we have the 23 at 107, and here it's 107 at 106.70. So we have like almost 30 pips difference, but it's not that big deal. Anyhow, for the time being, since that we'll be waiting for it, or since the technical indicators has showed some sort of a trending euro for the past almost 5 sessions, we would be interested to see what the euro would do once we test the 107.57. Otherwise, we might see another drop. But this is if the ECB managed to increase or to extend the current QE program. As for the Japanese yen, which is very important actually, and again we tested the 100-week moving average, the one that we talked about also for the past few days, and also it remains within the same area that we mentioned, which is the 50% Fibonacci, and also another resistance area, which is the same level 114, and failed to close last week above that resistance, which is very important also to watch. However, the COT chart shows that the net, or the net long short right now, we have a net short in dollar yen, which basically gives it some sort of a push to the upside, or in dollar yen, or some weakness in dollar yen. However, we still need a confirmation to close above the weekly, or above the weekly 100 week moving average, to show some sort of another push, might be toward 115.71. But again, the technical indicators are heavily overbought, which should be watched very carefully, because I don't believe that this would be a very good idea to start buying from these levels. Going forward to the British pound, which was one of the strongest currencies last week, and we continued all the way up and broke above. First of all, we broke above the falling down trend on the daily chart. We broke above the 50-day moving average on the daily chart. Also on the weekly, looks very positive. At the same time, we're testing the 61.8% Fibonacci level. This was on Friday actually, after the US jobs report, and continued all the way up. Sorry, the 61.8 is here. And for the time being, we have to keep an eye on the 100-day moving average on the daily chart, which stands around 128.05, which we believe that it's going to be a huge resistance to look at, and most likely some of the sellers will appear at that area. But again, ahead of key economic releases this week, in addition also to the Federal Reserve in December, we would like to stay away a little bit from the market, and also to narrow our risks. Going forward to gold prices. Gold prices continue also to hover around again the same level that we mentioned last week. So first of all, at the beginning of last week, we went all the way up a little bit to 111.93, but however we went back down again. But at the same time, we have two reversal candles at the same time on the daily chart at the same level, which is $11.71, which should be watched very carefully in the next few weeks, because again, this level has been holding for the past 2 weeks, and this might also lead to some sort of a bounce in the next few days. Technical indicators are turning slightly higher here. We failed to continue or to stabilize above that level. However, there is still a possibility for another bounce as long as 1170s continue to remain remains solid. The final chart of the day again, which is the S&P 500, and this was very interesting actually last week, because the level, which is but we went all the way to record high as always, or since the record high in for the past few weeks, or the beginning of November, at mid of November. However, since then we've seen some sort of another decline all the way back to below 22. However, this is still far away from any retracement that we can talk about, because we are still above the major support area right now, which is a solid resistance area for the whole year of 2016. But right now, after the breakout, this might be only a test for the failure of the one that we've seen here. However, as long as we stay above the 2189 almost, this should be a very interesting interesting area to start buying. However, from my side, again, ahead of the Federal Reserve, I would be interested to stay aside and stay away from the U.S. equities, and also to narrow my risk for the market. So these are the technical charts that we will be watching again in the next few days. So this is it in this video, or this week. I would like to point out again that the material and the information of this video is only for educational purposes only, and not to be taken as an advice. If you like this video, you can also share it on your social media network, whether Facebook, YouTube, or even Twitter. Also, if you have any comments, any feedback, any requests, you can also write below, or write below the video or in the comments sections. This is it for this video. I would like to also wish you a very successful week ahead. Thank you for watching. I'll see you once again next week.